Hello and good morning. Thank you for joining this session and welcome to another episode of the Market Snapshot series. So, today we'll be talking about the major trends happening in the markets right now. We'll also be talking about the key highlight events happening on the economic calendar, both prior as well as the ones expected later in the day. And once we cover that, we'll do some technical analysis and try to establish the key market structures. And hopefully, from these, you will be trading from an informed perspective. So, as usual, I'll begin with a disclaimer. This is not investment advice. It's not a recommendation to trade. It's a purely educational session. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So hello, Kennedy. Hello, Yasir. Thank you guys for joining. So let's get things started. I think the most important thing that's currently happening in the market is gold basically breaking the $2,300 price level. And this happened early this morning. And it's a key defining moment, especially for gold traders, as we have not seen these levels before. So this is an all-time high. It has never happened again, and people are worried whether gold will be making a retracement or whether it will be continuing in this same direction. So we'll be talking about that. We'll be looking at other markets that are currently hitting new all-time highs. And once we go through these, everyone will understand where to position themselves, what risks to take or not to take. And hopefully this gets everyone in a profitable position. So hello, Clement. You can see Jeremiah in the house, Jumbo. Hello, Dennis, Junge, Maureen. I can see articulating tutorial. Waiting to watch from Embu. Thank you. Hello, Pauline. Thank you guys for joining. So let's get things started. So I'll be starting with the economic calendar. And this is from a website that is quite popular among traders. It's called Trading Economics. It tends to share quite a lot of information. And this really helps for a trader who is looking to get real-time news. So the key highlight for the day is that Swiss inflation eases to 2.5-year low. So the annual inflation in Switzerland slowed to 1% in March 2024, down from 1.2% in February and below forecasts of 1.3%. It was the lowest reading since September 2021, mainly due to a decline in prices of food and non-alcoholic beverages and transport. So we know that over the past 2 years, central banks have been hiking interest rates. And the main reason they were doing this was to narrow down on inflation and make sure that inflation is slowing down back towards their target. So it seems like the Swiss National Bank over-tightened their policy. And this led to the surprise rate cut that happened earlier last month. And this surprise rate cut in Switzerland dropped interest rates to 1.5%, leading to a big sell-off in the Swiss franc. So if you're a trader who is focused on USD CHF, you have seen how the dollar has rallied against the Swiss franc. And today, early in the morning after we got this news, we saw the Swiss franc continuing to slide against the dollar. So we will continue monitoring this. We will cover this during the technical analysis part and try to identify if there is more reason for further momentum. So besides these, other key market highlights include Italy services sector growth beating estimates, Spain service sector growth at a 10-month high, Spain private sector growth strongest in 11 months, European shares flat on Powell remarks, Turkey trade deficit narrows in March, and India services PMI revised upwards. So among the interesting ones is the European shares being flat after the Powell remarks that happened last night. So European stock markets were muted on Thursday, with both the Stoxx 50 and broader Stoxx 600 indices hovering near the flat line as investors digested comments from multiple Federal Reserve officials while anticipating the release of the ECB's latest policy meeting minutes later in the day. So Fed Chair Jerome Powell emphasized the necessity of acquiring further data before considering policy adjustments. So remember what Jerome Powell has been saying. We are on a data-dependent approach. The target is to get inflation back to 2%, but somehow US inflation has remained significantly high, with the most recent data for official inflation jumping higher to 3.2%. So there's still more room until inflation gets to that target. And before that happens, there's very retro or minimal chance that Jerome Powell will consider cutting interest rates. However, he hinted at potential rate cuts starting this year. So in corporate updates, Basilia Pharmaceutica soared by 10% following the approval from US health regulators for its antibiotic Zevtera. Meanwhile, Compo Group surged 6.7%, subsequent to Morgan Stanley's upgrade of the company's stock rating from equal weight to overweight. Volvo Cars added more than 3% after reporting 25% year-over-year rise in sales for March. Sanofi gained 0.6% following its agreement to settle 4,000 lawsuits associated with the discontinued heartburn drug Zantac and its purported link to cancer. So this is how the EU 50 or the Euro Stoxx 50 cash index has been performing. So despite the earlier sell-off, it's also attempting to break into a new all-time high. So with that in mind, now we can jump in and check the economic calendar to identify the key highlights for the day. So as you can see that earlier in the morning, we had news coming from Switzerland concerning CPI and the month-over-month change of 0.0%. But then for the annual inflation, it dropped to 1.0%, down from 1.2% in the previous reading. So services PMI in Italy improved. Italian services PMI improved to a positive 54.6. French final services still under contraction, but showed some good improvement. German final services entered into expansion territory above 50.0. And then for the Eurozone final services PMI, we had 51.5, a big improvement from 51.1 in the previous reading, as well as the expectation. So going forward for the rest of the day, the most important news for the day will be the ECB monetary policy meeting minutes. This will be released at 2:30 p.m. It has the potential to cause volatility in the euro pairs, especially if there is a key concerning developments regarding how the ECB members made the decision on interest rates in the previous meeting. Then later on, we'll be looking at trade balance from both Canada and the US at 3:30 p.m. So trade balance is basically the difference between exports and imports, which is a key indicator of how the economy is doing. Then unemployment claims, which is a weekly data point, will also be important in trading the US dollar. So after that, we'll be looking at natural gas storage in the US at 5:30 p.m. And then two more speeches from Fed members, in this case, Fed member Bakin and Fed member Mester at 7:15 p.m. and 9 p.m. in the day. So that's it. That's all the expectations for the day. So it seems more likely to be price action traders territory where we don't have any major economic announcements. So remember, this is the last day of trading before we get to the non-farm payrolls on Friday. So a lot of investors and traders are majorly focused on the US non-farm payrolls, which come up on Friday at 3:30 p.m. And this is expected to be a major market mover and perhaps the biggest news of this week. So that being said, I don't know if we have any other highlights. So from last night's speech from Powell still expects Fed to lower rates this year as inflation follows a bumpy path towards 2%. So Fed Chair Jerome Powell doubled down Wednesday on his belief that inflation was a bumpy path down to 2% and that central bank officials expect to lower rates at some point this year. Powell also once again inserted that the Fed would maintain its independence during this red-hot election year, noting that its analysis is free from any personal or political bias. His comments about inflation marked the second time in the last week that Powell offered assurances that the overall outlook had not changed much, despite some hotter than expected readings at the start of the year. Such data does not materially change the overall picture, which continues to be one of solid growth, a strong but rebalancing labor market, and inflation moving down towards 2% on a sometimes bumpy path. Said Powell on Wednesday in a speech delivered at Stanford University. So a new inflation report released Friday showed a slight cooling in the personal consumption expenditures index, or the PCE index, which is the Fed's preferred inflation gauge. So last Friday, Powell said the PCE result was definitely more along the lines of what we want to see. So the PCE reading followed stickier inflation data in January and February from other gauges, such as the consumer price index. So those results raised concerns among some market observers about the pace of rate cuts in 2024. So the Fed decided last month to hold interest rates steady and maintain median projections for 3 rate cuts this year, but 9 officials predicted 2 or fewer cuts this year. So PCE inflation logs lowest annual increase since March 2021. So this was the last reading, which was 2.8% for core PCE. 2.8%. And then for core CPI, it was at 3.8%. It's still quite a distance until we get to the 2% target. So I will not go through the entire article, but now you're getting the gist of the matter, where there has been a lot of expectations that the Fed will go for 5 rate cuts. That was reduced to 4 and 3 in the last meeting. And judging from what we are seeing with oil prices as well as the inflation reports in the US, then it is likely that interest rates could stay higher for longer, which is a cause for the strengthening dollar and the current trend of rising bond yields within the US. So if we check the 10-year bond yield, it's just 10 basis points away from 4.5%, which is a record high. And the shorter term bond yields for 1 month and 3-month contracts, they are way above 5.3%. And this is considered some really good and interesting income for bond traders. This creates dollar scarcity and tends to strengthen the dollar. So if you look at the CME and you look at the projections for the next meetings, the next meeting, which will be held in 27 days from now, we're expecting that the Fed will be holding interest rates at the current level of 5.25% and 5.50%, and there's a 95.2% probability. However, if you move to the next meeting, which will be on the 12th of June, there's a 55.8% probability that the Fed will cut rates by 25 basis points, and this number was somewhere around 70% within the last month. So the number is reducing, and the probability for the Fed holding rates on the next meeting is also increasing to 41.5%. So if you fast forward to July meeting, then the probability of cutting rates by 25 basis points is also high at 49.9%, back to between 5% and 5.25%. And the probability of rates remaining high is down to 24.4%. So now you can get the overall outlook, and this is data from the CME Fed Funds Futures. So as you can see, there's a lot of commitments from investors betting that we are not going to be seeing any rate cuts until June and perhaps even July. So that really depends on the data coming from the US economy, and inflation is not that promising. So with that in mind, if you look at oil prices and how they have been gaining, they are up 16% this year alone, then that is bound to translate into higher consumer prices, and that is a major hindrance for the US. So among the causes for the strong rally in oil prices are one, there's a lower supply as major producers are keeping output cuts in pace, and signs of stronger economic growth in the US, the world's biggest oil consumer. So, meeting of top ministers from the OPEC. This happened yesterday, including Russia, kept oil supply unchanged on Wednesday and pressed some countries to boost compliance with output cuts. So the group said some members would compensate for oversupply in the first quarter. It also said that Russia would switch to output rather than export curbs. So Russia has been cutting its oil exports, but now it's being pushed by the OPEC to consider cutting output in the first place before it starts considering cutting exports. So with this in mind, we have seen Brent oil facing a resistance at somewhere around $90 per barrel. But then there's still more upside potential as economies continue to recover, which creates higher demand for oil, which tends to have a positive influence on prices. So as we proceed, we know that this is an interactive session. So if you have any questions, feel free to type them in the live comment section, and I will be responding to these questions as we approach the end of the presentation. You can see more comments here. Hello, Maureen, Paul Cheriot, Moai, Slim DJ, Samson, Tony Dark. Thank you guys for joining. Malombe and Trapskid. So if you have any questions, feel free to type them in the comment section. I'll be responding towards the end of the presentation. So on the next part of the presentation, I will be focusing on technical analysis, and this is the favorite part for traders. So let's get right into it. So the first chart I'll be focusing on today is the dollar index chart. So the dollar index has been pretty bullish, save for this week. So as you can see, today being the fourth day of the week, the gains that we saw on Monday were erased on Tuesday, Wednesday, and today being Thursday. We have officially entered negative territory for the dollar index for the week, despite having quite a strong bull run in the last couple of weeks. So the dollar index has been on a very strong bullish trajectory, but then after the comments from Fed Chair Jerome Powell, there was a big sell-off leading to this downside momentum. And I expect at some point, investors will be questioning the inflation narrative, and potentially we could be seeing the dollar index making a strong bounce from this trend line. So we are on the verge of potentially seeing the dollar bouncing back and starting to make yet another rally as investors realize that inflation is not is quite sticky in the US, and it's a major problem for the Fed. So looking at major currencies, starting with USD JPY, the market is still trading within this range, though the volatility is more to the upside compared to the downside. So if you look at the lows for this week, in the last 4 days, Monday, Tuesday, Wednesday, this is Friday last week, this is Monday, Tuesday, Wednesday, and today, Thursday. You'll notice that the USD JPY has been maintaining this upper trend line. So it's forming higher highs as well as higher lows, but then it has not yet broken this range. So the range we've been observing here started somewhere around the 20th of March. And the market has just been moving sideways. And as we all know, this represents either an accumulation or a distribution zone. So we are yet to find out, but the breakout is usually very clear. So eventually we will see a breakout in USD JPY, and this could be massive for any trader. So I urge you to consider just monitoring this range and be patient until you have a clear breakout. So the market could potentially break out towards the upper side, basing that on the fundamentals. But then if there's intervention of any kind by the Japan's Ministry of Finance, then that would strengthen the Japanese yen and the breakout would happen towards the lower side. So remember, this is a level that Japan has historically intervened in the currencies, and after the intervention, all we have seen is the Japanese yen strengthening against the dollar. So it happened here, and this was 24th of uh, 24th of October 2022, and then the Japanese yen strengthened for a couple of months. So later on, the other intervention happened around here, when there was a big drop, then another one around here, then the most recent one happened around here, and this was in February 28th this year. So we saw the Japanese yen strengthening against the dollar for like 5 consecutive days before investors reversed the trend and kept pushing upwards. So the pattern we have here is a cup and handle pattern, which is from a technical perspective, a continuation pattern. So if the Bank of Japan doesn't intervene in the USD JPY currency pair, then the possibilities represent a potential breakout towards the upper side. And once we break above 151, we will not be having any candlesticks on the left unless we go all the way back to the 90s. And that's quite a stretch in technical analysis. So there's still more room for upside in USD JPY. It has already started today. We already crossed the gap, pulled back, and the market is attempting to move even higher. So for short-term intraday trading, then yesterday's high is a considerable target around 151.9. So for Euro USD, we saw a very strong acceleration. So following the Jerome Powell's comments, what we are seeing here is the Euro USD making quite an impressive recovery. However, we are not yet out of the woods. We haven't yet broken this trend line. So while we enjoy this strong bullish momentum at some point, we know that the journey will get quite difficult for any bulls in the market, and that's when the Euro USD approaches this trend line. So an estimate for the target area is this area here. So we could be seeing the market range to 1.08862. Then from there, we will be trying to identify if there is a potential for a breakout or a reversal, but a reversal seems more likely. So we are currently testing the high that we saw last week. So this is the highest price that we saw last week. So a reversal could also be playing out around this area here. So all you have to do is be patient around this area here to see if there is a signs of reversal. And that would present a nice short selling opportunity, especially considering that inflation is dropping much faster in the Eurozone compared to the US. So yesterday we had flash inflation data from the Eurozone, which showed inflation dropping faster than expected. So for pound USD, it's a similar case. I remember we talked about this 2 weeks ago when the pound was making a rally towards this area, found a resistance, which was a previous support, and moved downwards, though it took a couple of days to eventually get to the target. And then after dropping, we saw the market bouncing strongly yesterday, and now we are yet back to the same resistance. So in this case, it makes more sense to be vigilant and observe the price level to see if there's evidence of sellers entering the market or buyers breaking above this. So it's a key decision point for any pound trader, where you could be looking for potential short selling opportunity towards 1.25733, but also a bullish opportunity towards 1.27725. And all we have to do is follow the price action here. So as for USD CAD, we have a major breakout. So after trading within this madness, or I would call it through these noisy charts. So this is what we have now. So we had a major resistance here that was tested several times. Market was unable to break. Then on a shorter time frame, notice how we had a very strong resistance here that managed to hold for 3 consecutive days. And once we got the strong rejection candlestick here, which is a shooting star, the market changed direction, dropped, and got to a major support level. So the support level was the previous bottom, and I'll try to stretch it a little bit. So this was our support level. Notice the way the market bounced from this area, the bounce from this area here, and also the bounce yesterday. So it was a key level support. The market attempted to bounce, but now it has broken out towards the lower side. And now, if you're looking for a target, if the market keeps going downwards, then there's several targets along this area, around 1.34835. So there's still more room for downside for the USD card before the dollar begins to recover and strengthen again. So as for gold, which is the enigma in the house and the title of today's session, what we have been seeing is a very strong bullish momentum. So from the daily chart, you can see this is 3, 4, 5, 6, 7. So we have had 7 consecutive days where gold has been trading higher and higher, forming new highs. And early this morning, gold was able to form a new high of 2304, and it's an all-time high. So the theme for trading gold has been the same. You wait for the pullback, and then you ride the bounce from that pullback. So it's more of a retracement trading kind of approach. So whenever there's a retracement, you look for signs of bullish entry, and then you ride the next leg higher. So it has been happening for quite a good number of days, especially after we got out of this sideways momentum. So this one represented some moment of consolidation that lasted days. So if you are a technical price action trader, you know how good this can be, because if you manage to capture the breakout, you can ride that for a long time. So we saw this happening again, where gold consolidated for a while. So if you are monitoring this area here, then we know we had a triangle, a breakout, retest, and a continuation. And now gold is on a path that represents a pullback. So you don't want to be the person who is shorting or looking for these short-term short selling opportunities in gold when the overall momentum is upwards. So the idea here is to be patient and wait for the premium opportunity to go for a buy position when the market indicates signs of moving upwards. So from the most recent close, and I'm talking about the low of yesterday, Wednesday, the low of Tuesday, the low of Monday, you can see that there's quite a trend line here. And now there's a potential that gold could be headed back to the same trend line before bouncing and trading higher. So in this case, I would be very observant about this area. So the analysis here is on the 15-minute chart, and that's a potential area of entry if gold was to drop here and then show signs of a bullish entry. Tuesday, we discussed something along the same lines, and we had gold making a strong rally. So I believe it was somewhere around here, and we projected that gold would rally to this area here. So it happened quickly, market pulled back, and then continued along that direction. So today, now we are looking at yet another pullback, which could represent another potential entry opportunity. So as for US equities, we are seeing a strong bounce from the NASDAQ. So it was going downwards. We projected it would drop to this area here, failed, bounced from here, early, pulled back to this trend line here, and then made a big rally yesterday. So today, I expect the NASDAQ to at least complete the journey of the bullish momentum and potentially get to this upper trend line in what looks like a channel that is bearish going forward. So in this case, a bounce from this trend line and a rally towards this other trend line is in the play today for the NASDAQ. For the Dow Jones, there was a very nice pin bar here. Sometimes some of you describe it as a hammer. So after this happened yesterday in the evening towards the close of the market, you can see that the market opened quite strongly bullish, and we could be seeing some further upside, especially if you break 39,280, which is a key price level that was acting as support here. So if the market manages to break that, then potentially we could be headed higher. And of course, the previous high is all the way up. So the previous high for the US 30 or the Dow Jones is 39,889, and this could play out going forward. So for the S&P 500, we saw the market breaking, retesting, attempting to go down. I made some projections expecting that the price would continue pushing downwards after breaking this major trend line, but I was wrong, And as you can see, after the market bounced a couple of times, got inside, but then yesterday in the evening, after Jerome Powell's speech, this is what we saw in the market. So a very strong hammer or pin bar, and then today the market opened being very bullish, and now we are on a path that would potentially lead to a full price recovery and the market getting to 5,276. So for Brent oil, it has been pretty bullish. So we discussed this on Tuesday. We talked about the market pulling back here. We decided we are not going to short. We looked at potential entry opportunities for a continued bullish momentum. So it didn't last long in the day before the oil market bounced and showed buyers entering. And this then continued pushing higher. Then on Wednesday, kept pushing higher. And today we are seeing another pullback in the market again. So as usual, we draw our trend line here for the past couple of days. So we look at this and potentially see that the market is very close to a key level support. So now that we know this, we wait for the market to get to our trend line and then look for potential buying opportunities. And this is based on the evidence we see from the chart. So if you see some evidence of buyers entering the market, then this might be a nice entry area, buying Brent oil and continuing to benefit from the strong bullish momentum. So from the daily chart, I just want to show you what has been happening. So I'll try and zoom this. So this is the fourth month of the year. So the price that the market closed was right here at the end of last year. And the current price level is about 15.55%. But then yesterday it was above 16.76%. So a very strong rally in oil prices, being up 16%, is expected to contribute to higher consumer prices, especially within the last 3 months. And this is expected to make things much more difficult for the Fed in terms of moving inflation back to 2%. So that's why I am confident that the dollar index will eventually make some form of recovery and potentially bounce from this trend line or slightly below it. So now that we have covered Brent oil, now we can move on to another asset. In this case, we look at the Euro 50. So the Euro 50 cash index is one index that we were bullish early in the week. It kept moving as projected, but did not get to the target. So reversed on Wednesday. And today is making a strong rally. And the case for a new all-time high is now quite possible. So what we are seeing here is a potential for the market now going for the previous high. And I think this is an easy play. For UK 100, it's the same thing. We projected that the market would eventually drop the support, got to the support quite nicely, bounced from there. Today, it's accelerating a recovery, and now we could be going to another all-time high. So the potential seems more likely that the market eventually gets to $8,016 per share of the FTSE 100 index. So as for Bitcoin, what we are seeing is an acceleration of the bearish momentum failing at around this area here. So it seems like there's a correlation. So after the market made this huge drop, you can see that yesterday and today we have had a couple of pin bars. And these pin bars are very important when you know how to read them because they indicate what's happening in the market. So they are showing a market that is continuously rejecting lower prices. And these are usually some form of evidence that buyers are entering the market. So in this case, we have seen rejections for 3 consecutive days. And I believe today is the day that we see Bitcoin finally making a strong rally and perhaps going all the way back to the previous high of $71,343 per Bitcoin. So the French 40 index also didn't manage to get to the lower trend line. So it bounced off early, though there was this big attempt here, the big gap yesterday. But then after closing the gap, the market kept going up. And now the idea is to trade the opposite direction and head for a newer high. So the USD CHF, the one that was interesting because of the announcement of the inflation report, shows the CHF continuing to weaken to the dollar. And in this case, there was a strong bounce this morning around 9 a.m. And now we are yet to hit another high here. So there's still more room for upside with the very short-term potential of the market getting to the previous high, but also a long-term potential that the market continues with this bullish momentum and eventually gets to 0.92449. So another interesting asset I've seen is the Chinese equities, starting with the Hong Kong or the Hang Seng 50 index. So after the strong rally that happened on Tuesday, yesterday there was some form of pullback, and today we are continuing. So the target is 16,991 again. Now the market moving back to retest this area here. And it seems to be the same across board for Chinese equities. So after the big rally here, which was a major breakout, there was a pullback for 2 days and then a bounce yesterday. And today we are bound to eventually complete the journey as the market heads back to the previous high above 12,358. So one interesting asset we have not been talking about is the Spanish 35 IBEX. So this index has made quite a strong rally. It has rallied for 5 consecutive weeks. And on the daily chart, this is how it looks like. So we had this period here, which represented some form of consolidation. So once the period ended and the market eventually made a breakout, notice how it made a very strong rally last month. So towards the end of the month, I would say this is the quarterly taking profits. So the end of the quarter was the same as the end of the month. And then this month, you can see how we started. So the market made quite an interesting pullback. So from the 15-minute chart, I'll show you how the pullback played out. So in this case, we had the market continuously dropping. I would use this as the area, and then this other one as the support. And then this morning, the market opened with a strong bullish momentum. So for the question I saw in the comment about the chart of the day, I would say the Spanish IBEX is the chart of the day for me. So it's evidently a very strong momentum after a 3-day pullback, I would say 4-day pullback. And now the market is gunning for yet another all-time high, and I doubt it will stop at this recent high. There's still room for more momentum upwards. So this one might as well be the best bet for trading today. So that's it for the day. I'll be checking the questions, try to answer a couple of them before we end the session. So good question here from Malombe. How do you think about the dollar index retracement, or is that temporary? Then we go back to a strengthening dollar. So I think I've already mentioned this. The current retracement seems more likely that the dollar will bounce back, especially when you consider the inflation versus oil prices. And they are both indicating that oil prices might continue to strengthen and inflation might remain sticky. So those are two things. Also, if you look at other Fed members, there are other Fed members that are not expecting any rate cuts. So despite Jerome Powell himself saying that he's expecting some form of rate cut later in the year, for now, there are other Fed members who are seeing things as they are, and they have that expectation that things might be a little bit tougher than they are reporting. Good question here for gold. I think we've already covered gold. We did some time on gold, and we said that the pullback is healthy. So it's more about observing this area. Go to your 15-minute chart, find this trend line, spot this area, and wait for it. So in this case, don't be interested in short selling a very strong bull market. So around 2282 might be an interesting area to look for a buy. But the key thing is to observe the price action and look for evidence of entry by buyers in this market. So I hope that helps. So a good question from Trapstead. With the data we have and the technical analysis, are we likely to see a strong dollar this week or next week? So the strength of the dollar might be dependent on what we see tomorrow on the non-farm payrolls. So I believe the non-farm payrolls will be a key determinant on the next direction for the DXY. So in this case, just observe the non-farm payrolls tomorrow. Don't trade before the news. Just take your time, process what happens with the non-farm payrolls before you make a trading decision. But there's a likelihood that the dollar will strengthen with that news. So how far do you expect gold to dip today? According to BTC ranging, what could be the next move this week? So I've already mentioned for gold, we are looking at potentially 2282. And for BTC, it seems like we have a rebound. And there's a good chance that the rally starts from now and the market makes a recovery. So we could be seeing BTC bouncing from this area and now starting to head higher. So it has been a sideways momentum for a couple of hours. And now, if you observe these areas here, you'll notice this is what's happening. And from the upper side, I would say this is what's happening. So a potential breakout may be coming for Bitcoin. So if you're a Bitcoin trader, the potential breakout is almost playing out. A good question. Can I make a profitable trader trading a single pair? Yes, you can, absolutely. The only difference is that you will be limiting yourself. So if that single pair is ranging for a couple of days or weeks, you won't have any opportunities. Well, the more open-minded trader will be looking for opportunities elsewhere. So that's it for the day. Thank you very much, guys. Thank you for your time. I appreciate you. Remember to like and share the video. That simple like that you give me down there is very important for me. I hope to see you guys on the next session.